Welcome back to the channel, and thanks for joining me. I'm Algabot, and on this channel we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. Today we're taking a close look at a strategy called Heikin Ashi Trend Shift. It's a trend-following approach built around Heikin Ashi candles and a moving average trend filter. Over the next few minutes, you'll learn how it reads the market, how it decides when to enter and exit, and how its risk controls are put together. Everything here is purely educational, so let's dig in and see how it works. So what exactly does Heikin Ashi Trend Shift do? At its heart, this is a trend-following continuation strategy. Rather than trying to guess tops and bottoms, it aims to join a move that is already underway, and to do so at a moment when the trend appears to be resuming after a brief pause. The strategy is built for liquid markets such as major foreign exchange pairs or metals. Think of instruments like euro to US dollar or gold, and it was designed with the 1-hour chart in mind. That said, every calculation is scaled to the market's own volatility, so the same logic can be applied across other symbols and time frames. Two ideas drive the whole system. The first is the Heikin Ashi candle. Ordinary candles can flip color from one bar to the next, which makes raw price look noisy and choppy. Heikin Ashi candles average each candle together with its neighbors, which smooths that noise into cleaner, more persistent runs of color. That makes it easier to read who appears to be in control. The second idea is a moving average trend filter, an exponential moving average of closing prices. The strategy only considers long trades while price is above that average, and only short trades while price is below it. Put those two ideas together, and you get the core behavior. In an uptrend, the strategy watches for the Heikin Ashi color to shift back in the trend's favor, and then considers a long. In a downtrend, it watches for the color to shift the other way and considers a short. Around the moving average, where the market is undecided, the two filters cancel out and the strategy mostly stands aside. Who is this style suited to? It's aimed at traders who are curious about rules-based, patient, trend-following automation, and who want to understand exactly why each decision is made. And remember, trading always carries risk, and losing trades are simply part of the process. Let's walk through the mechanics step by step. Everything the strategy does happens on closed bars only. It waits for each candle to fully close before making a decision, which means the signals do not repaint or change after the fact. First, the regime filter. The strategy calculates an exponential moving average of closing prices, using a default period of 50. If the most recent close is above that average, the market is treated as an uptrend and only long setups are allowed. If the close is below the average, it's treated as a downtrend and only short setups are allowed. Next, the entry itself, which the strategy calls a color shift. For a long, the just closed Heikin Ashi candle must turn bullish after the previous candle was not bullish. In other words, the smooth trend paused or pulled back and has now resumed to the upside. For a short, the mirror applies. The just closed candle turns bearish after the previous one was not bearish. Before acting, the strategy applies a noise gate. The body of that shift candle must be at least a set fraction of the current average true range, 15% by default. Small, indecisive candles are ignored, and this is the main filter against false signals. Now risk. When a long is opened, the stop loss is placed a multiple of the average true range below the entry, 1.5 times, by default. The take profit is then set as a multiple of that stop distance. With the default reward ratio of 2, the profit target sits twice as far from entry as the stop. The idea is that the occasional larger winner can help offset the smaller trades that get filtered out or stopped along the way. Shorts are handled the same way, simply mirrored below the entry. There are also two active exit tools. The first is an opposite color shift. If the strategy is holding a long and the Heikin Ashi candle shifts bearish, it closes the trade early rather than waiting for the stop, because the smooth trend has turned against the position. The second is a one-directional average true range trailing stop. As price moves in the trade's favor, the stop ratchets along behind it, helping to protect open profit while still leaving room for the move to extend. Finally, the strategy holds only one position at a time per magic number, and it acts just once on each newly closed bar. Let's look at the actual MetaQuotes language 5 code that runs inside MetaTrader 5. At the top are the input parameters, and these mirror the strategy's settings exactly. EmaPeriod, defaulting to 50, sets the trend filter moving average. ATR-period, at 14, controls the average true range used for the noise gate, the stop, and the trail. BodyAtrFrac, at 0.15, is the minimum shift candle body as a fraction of that range. AtrStopMult sets the stop distance at 1.5 ranges, and reward ratio sets the target at 2 times the stop. Trail ATR-multiple controls the trailing stop, and then we have the lot size and the magic number. Below the inputs are the 2 signal blocks. The long block reads, if uptrend and bull shift. Uptrend simply means the close is above the moving average, and bull shift means the Heikin Ashi candle has turned bullish after not being bullish. When both are true, the code sets the entry at the ask price, places the stop a stop multiple of range below entry, and calculates the take profit as the reward ratio times that risk. It then calls trade.buy with the lot size, the stop, and the target attached. The short block is the exact mirror. If downtrend and bear shift, meaning the close is below the average and the candle has turned bearish after not being bearish, the entry is taken at the bid price. The stop is placed a stop multiple of range above entry, and the take profit is the reward ratio times that risk below entry. The code then calls trade.sell with the same structure. Notice how both sides share identical logic, simply flipped in direction. Now let's bring it all together on a chart and walk through 2 complete trades, first a long, then a short. The blue line running through the candles is the EMA trend filter. The strategies read on which side of the market to favor. Look at the left side of the chart. Price is trading above the EMA line, so the strategy is in an uptrend regime and is only interested in long setups. The first couple of candles are rising and bullish, showing buyers in control. Then a single candle closes lower and turns bearish, a small countertrend pause. This is exactly the kind of pause the strategy waits for. Notice it doesn't chase, it simply watches. On the very next candle, the smooth Heikin Ashi color shifts back to bullish after that pause, and price is still comfortably above the EMA line. That combination, an uptrend regime plus a fresh bullish color shift with a body large enough to clear the noise gate, is what the strategy is looking for. That's where you see the buy entry marker appear. The stop loss is placed a set multiple of the average true range below the entry, sitting just beneath the recent lows, while the take profit target is set twice that distance above, following the default reward ratio of 2 to 1. Watch what happens next. The following candles continue higher, each one building on the last as the up move extends. Because the trade is moving in its favor, the trailing stop quietly ratchets up behind price, protecting the open gain. A few candles later, price reaches the take profit target and the long trade is closed for a completed move. That's one full cycle. Pause, shift, entry, and exit at target. Now the picture changes. Price stalls near the highs, rolls over, and begins to slide back down toward the EMA line. A couple of candles later, it closes below that line. The regime has flipped. The strategy is now in a downtrend and is only interested in short setups. Just as before, it waits for a pause. Here you can see one candle push back up and close bullish against the new downtrend, a counter-trend bounce. The strategy holds its patience. Then, on the next candle, the Heikin Ashi color shifts back to bearish while price remains below the EMA line, and the body is large enough to pass the noise gate. That's where the sell entry marker appears. This time the stop loss sits a multiple of the average true range above the entry, just over the recent highs, and the take profit target is placed twice that distance below. From there, the down move develops. Each following candle prints a lower close, carrying price steadily downward. The trailing stop follows along above price, locking an open profit as the move stretches out. Finally, price reaches the take profit target near a fresh low, and the short trade is closed. Step back and notice the symmetry. In both trades, the strategy did the same 4 things in order. It confirmed the trend with the EMA filter. It waited for a counter-trend pause. It entered only when the Heikin Ashi color shifted back in the trend's direction with enough conviction to clear the noise gate. And it managed the exit with a fixed target, an opposite shift early exit, and a trailing stop. It never tried to predict the turn. It responded to what the smooth candles actually did. Of course, not every setup unfolds this cleanly. In real markets, some shifts fail. Price can reverse before reaching target, and losing trades are a normal part of any approach like this. What the chart shows is the logic the strategy follows, not a promise about any single outcome. And that brings us to the end of our breakdown of the Heikin Ashi Trend Shift Expert Advisor. Today we covered what the strategy is, how its Heikin Ashi color shift and moving average trend filter work together, how it manages stops, targets, and trailing exits, and we walked through both a long and a short trade on the chart, along with a look at the underlying code. Remember, everything in this video is for educational purposes only. It is not financial advice, a recommendation, or a solicitation to trade, and trading always involves real risk. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and let me know in the comments which strategy you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.